Hello to all dear friends, welcome to the educational video on candlestick patterns. In this tutorial we intend to examine the various candlestick patterns that are widely used in technical analysis. Patterns that help you obtain strong signals for buying or selling in financial markets. In the previous tutorial we talked about a classification of candlestick patterns that included three categories: single candlestick patterns, double candlestick patterns, and multiple candlestick patterns. Next, we will examine each of these categories and their various types. In this tutorial, we will focus on the first category, which is single candlestick patterns, divided into four types: doji, Marubozu, pin bar, and spinning top. In the previous section we discussed doji and its types, and now we want to examine and explain Marubozu and its types. What is a Marubozu candlestick? The Marubozu candlestick is a single candlestick pattern characterized by a long body with no shadow, or a long body with a small shadow at the top, or a long body with a small shadow at the bottom. This characteristic uniquely indicates that buyers or sellers held control over the market from the beginning to the end of the trading session. The Marubozu candle can be bullish or bearish, indicating the direction of the trend. The presence of a Marubozu candle in the chart is undoubtedly a clear message of the strength of one side of the market, which shows that the operators are very determined indeed to push the price in a specific direction. The types of Marubozu candlestick patterns in technical analysis, which are bullish and bearish, are divided into three main categories: complete Marubozu candle, opening Marubozu candle, and closing Marubozu candle. The complete Marubozu candle is the most powerful type. This pattern is considered, in this case, the opening price is exactly equal to the closing price. In other words, the body of the candle covers the entire price fluctuation range and there are no shadows above or below it. The presence of a complete Marubozu candle indicates a one-sided trading session, where buyers or sellers have absolute control over the market. This pattern shows that the price has moved strongly and without any fluctuations in the opposite direction. In the opening Marubozu pattern, the opening price is exactly equal to the lowest or highest price of the session, but unlike the complete Marubozu, a small shadow is seen at the end of the candle. This shadow indicates that despite the decisive price movement in one direction, there was a slight fluctuation in the final moments of the session. The presence of the opening Marubozu candle suggests that despite the dominance of one group of traders in the market, the opposing group was able to show some resistance at the end of the session, although they did not succeed in changing the direction. The closing Marubozu is the opposite. The undo of this candle lacks a shadow. However, a small shadow is seen at the beginning. In other words, the closing price is exactly equal to the highest or lowest price. However, the opening price is slightly different. This pattern indicates that despite the initial fluctuations, one side of the market has managed to steer the market in its desired direction with strength and has maintained this advantage until the end of the session. How to identify the Marubozu candlestick pattern in charts. In this section, we will examine the steps to identify this pattern, step by step. The first step is to examine the appearance of the candlestick. The first step in identifying the candlestick pattern. The Marubozu candle focuses on the appearance of candles in the chart. Look for candles with these features: a long body, the absence of shadows or very small shadows, and its rectangular shape. In the second step, we need to determine the direction of price movement. After identifying candles with a Marubozu appearance, you should determine the direction of price movement. For this purpose, pay attention to the color or pattern of the shadows. A bullish Marubozu has a green or white body, and the closing price is at its highest level. This situation indicates the dominance of buyers in the market and a strong bullish price movement. A bearish Marubozu, in contrast to a bullish Marubozu, has a red or black body, and the closing price is at its lowest level. Such a candle indicates that sellers have control over the market, and the price has faced strong selling pressure. Step 3 is to consider the market context and trend. When evaluating Marubozu candles, paying attention to the overall market context and trend is very important. Depending on the conditions in which this pattern appears, it can convey different messages. A Marubozu in the direction of the trend indicates the continuation and strength of the current trend. A large Marubozu against the trend can serve as a warning of a potential change in the trend. Step 4 is to use analytical tools to increase confidence in the accuracy of signals, including using indicators, analyzing trading volume, examining surrounding candlestick patterns, being mindful of support and resistance levels, which is very important, and analyzing different time frames. I am glad you joined us in this tutorial video. Please subscribe and like us. Goodbye.